Welcome to the Roy Morgan Weekly Update. The fifth week of the Albanese government saw the energy crisis on Australia's east coast recede, and this led to positive movement in some of the key economic indicators. First of all, inflation expectations are down. Perhaps most importantly, the weekly ANZ Roy Morgan Inflation Expectations Index dropped 0.2 points to 5.7% this week. The indicator has now not been above 6 for over 3 months. And although the energy crisis seems to have been resolved, at least for now, we still have high and rising petrol prices that they could impact on this index in the months going forward. So there was good news for the Albanese government on these 3 key indicators. The latest Roy Morgan poll shows that support for the Labor Party on a two-party preferred basis is 53.5%, that's up 0.5, and support for the Liberal National Coalition was 46.5, down 0.5. So that of course means that the Labor Party is more popular now than when it was elected. The latest government confidence figure is also up 2.5 points to 107.5. That's the first increase in a month. And government confidence, of course, is the one that says that people think the country's going in the right direction rather than the wrong direction. There was also a second straight increase in consumer confidence. The ANZ Roy Morgan Consumer Confidence Rating is up 3 points now to 84.7. This is the first time the index has increased in consecutive weeks since mid-April. But business confidence is a really different story. The latest Roy Morgan Business Confidence Rating for June is the first full month since the Albanese government was elected, and the rating was down by 2.9 points to 97.3, and you see below the magic 100. This is the lowest reading for nearly 2 years since September 2020 during Victoria's second wave of COVID-19. Now, several factors probably played into this month's fall. First, the increasing inflation in the economy, driving interest rate increases by the Reserve Bank and promises of more to come. There was also the energy crisis that raised questions on the reliability of energy, electricity and gas, and of course prices of those things. And finally, industrial relations. A big factor was the Fair Work Commission's decision to raise the minimum wage by 5.2% from July 1. This is the largest increase for many years, and a decision that impacts over 2.5 million Australian workers and obviously a lot of businesses. Now, as we look at this inflationary time, one of the questions many people are asking is how will the Australian economy cope with several interest rate increases in the coming months? And the answer is probably better than you might think. A key reason is essentially the savings that have been made by millions of Australians during the last 2 years of COVID, and these are significant. Since COVID began, Australia's wealth has increased by a massive $1.27 trillion, up 13.5% since March 2020. And although it's true, if you look at this chart, you see it's kind of tapered off a tiny little bit in the last year. Once the government stimulus programs essentially ended, it still represents overall a really substantial increase since pre-COVID. And that of course means that it's a substantial financial buffer for millions of Australians, and they'll be able to draw on those throughout the rest of the year. And also, it explains why key indicators like the ABS retail sales remain so high when consumer confidence is low. So the most recent ABS sales figures show an annual growth in retail sales of 9.6% up until April 2022. That compares to an annual growth of 1.9% pre-COVID. So this is an extraordinary difference. The RBA has also referred to this excess savings built up by Australians as one reason why they believe interest rates can be increased without causing major problems for the economy. The Roy Morgan figures on overall financial services market and the growth in essentially traditional banking suggest that this could be right. Now, Finally, some good news, particularly good news for the cinema industry in Australia. The Roy Morgan figures for March quarter 2022 showed 3.9 million people attending the cinema in an average 4 weeks. That's a massive increase, 77% on the prior quarter. We've all flooded back to the movies. So there are several blockbusters like Batman, Spider-Man and Uncharted that drew people back to the cinema earlier this year, and several more like the new Top Gun, Jurassic World films and the new Elvis biopic in recent weeks that have kept interest high in the cinema and in people taking a trip to the cinema. All the key demographic groups, as you can see, have increased massively in terms of going back to the cinema, and most importantly, it's the premium consumers, the neos, that are driving this return to the cinema in 2022. Thank you for listening, and I look forward to joining you next week when we'll have the latest data on inflation expectations, consumer confidence, voting intention and unemployment.